Hello guys and welcome to another video. Before we get started with it, I want to say the next. I am not a financial planner nor a financial advisor. I am not FCA approved. I'm not approved by any institution that allows me to give financial nor investment advices. Nothing mentioned in this video should be considered investment advice or guidance. Everything shown, talked, and explained is for pure and only educational purposes. The risk is on your own hands. Enjoy. Hello everyone and welcome to another video. I'm going to be doing the breakdown of each trade that I took today, Friday, August 6th, right? Yes. So I ended up with a very minor profit for today. Well, not very minor, but minor. So a 0.5, sorry. And yeah, we'll go through basically each trade that that happened, not that happened, but basically that I took, and of course the trades that basically I missed out on. So first price action of the day, pretty messy as we had NFP, so let me just do this for now. So first trade that I took was this. In my opinion, was a pretty good area per se. Ended up being a half loss. Why did I decide to take this trade? So let's look at the price action that basically happened before all this. We came from mitigating something from basically inside of this range, which is not much, not quite of a strong reaction in my opinion, but we basically did react pretty well. Cost a break right there. As you can see here, we have a mitigation block that ended up working out, but that becomes liquidity towards the extreme for basically price to come back up later. We have a potential QML line there that ended up working out as an extra confluence, in my opinion. So the extreme ended up giving out a pretty good reaction that basically later breaks out this whole structure, right? And just basing ourselves on that, we have a pretty strong bearish structure or bearish momentum, bearish, however you want to call it, bearish market that I was quite looking forward to, right? So any move to the downside or any how do you call this? Any good indication as a potential sell in this point was good enough for me to actually go and try and take a sell, right? So basically the first trade of the day that I took was a buy or a sell, So we had this structure right here. We had a flip, had this structure. I don't remember if I took a loss here or not. I don't think I did I? I don't remember. I should have something like this, right? So marker for me to remember that I took a loss there. But I'm gonna say no, as I do have the loss here. So we basically flipped up. We had that this demand was basically respected, right? So we then have this. Oh, I ended up in break even. Yes, this is the break even of this trade. Okay, so I basically took the trade on the open of the order block. The stop loss is somewhere around here because I wanted to cover for price potentially coming back to that liquidity as it did. It does cause a pretty strong reaction then, right? And when price actually respected this high, I decided to move my stop loss to break even. And well, that's when I basically ended up in, how do I say this, in break even. So what I missed out on in this move, let me actually get to this before I basically forget about it, is that we have demand here that was respected by this wick, right? So it causes a reaction. That reaction lasts very shortly, right? It's just a wick, or sorry, a candle up, nothing much more than that. But it then breaks, and the cost to that break, well, we could consider the extreme or, well, the pause that happens right before that. So basically the reaction. That right there is a sell. That could have been a pretty good sell, right? That I basically missed out on, as I was kind of looking at this at that time, thinking that this could hold, and well, basically to see if I could actually try and get a break even or something like that. But basically that's a little bit hard to find of an entry, right? As it basically happened in such a compressed price action, right? But basically it's basically just that, right? So missed out on that sell. I was kind of convinced on the buy at this point, but I wasn't liking the way that it was moving. Kinda missed out on this sell, which was a pretty good sell, as you can see, as we basically had a very strong flip very strong demand area right here, right? That had caused a reaction, right? And price basically then pushed down, created a pause. That pause basically pause or a buy to sell range, right? Price then comes back up to mitigate that. It does so perfectly and comes back down. Then it does create liquidity there, so that's an extra confluence, and price worked out pretty great from there. So that's an entry that I basically missed out on early in the morning. This sell right here, it was while I was taking the buy, and it was based on the fact that we had broken demand that had caused a reaction, right? And the major, well, not the major trend, but the potential major trend was basically the sells, right? So I was looking for any confluence that could give me a selling opportunity. Basically decided to go for that, and as you can see, it did react well for a sec, but then I moved my stop loss basically above these highs. Above those highs? No, I think my stop loss is somewhere around here, right? And I basically moved it above here. A little bit high, so in case it wants to take all of these equal highs that we had here and then fall down, right? But that's not quite what it did. So we then have this loss that basically caused major breaks of structure and of course all the flip. That's the area that I decided to go for. My stop loss was above this area, so I didn't get tagged out on this move. When price moved down in this move, if I remember correctly, was when I basically moved my stop loss to break even. If I remember correctly, I actually placed a trade on the 50 of this range. So I placed the stop loss somewhere around here, right? Which is why I ended up, well, actually, no, so I had a large stop loss. So I basically probably put it somewhere around here, so for it to be a half loss. Can't really remember, to be honest. So what we have also here is that this demand took the supply we had above that was a good but hard to find entry, which basically worked out great, right? So if we look at this in detail, right there, we have that this demand, this order block that we have right here, right, comes from mitigating this other order block, or pause in this case, right? That pause didn't cost much, right? But it is a pause that you have to consider and ended up working out in this case, right? When price reacts to that, it then breaks again, right? And we basically break, we could consider this as a mitigation, right? As a reaction to that. I don't know if it actually taps that. It does, yes, it does. Very, very minorly, right? By barely little, or am I mistaken? What's the low of this candle? Low of that candle is 121, and the high of this candle is 121. Yeah, well, to the tick. But we could count that as a reaction. Price then breaks that, and after it breaks that high right there, or well, actually the high of this order block right here, that could have been a good entry right here in this order block with the stop loss just below, right? What I did identify is that the fact that we basically created a lot of liquidity with a lot of equal lows, sorry. And we did create also liquidity above with this size right here, and well, this size, and that's very much it. And well, we did have some reasons such as this, right, to go higher. So a pretty good entry, a little bit hidden, not that easy to find, but yeah. So here, when price was approaching this area, I was kind of watching this, right? I was actually about to take a buy right here. I was thinking I actually had a trade placed on this one, but then I realized about this, so I kind of wanted to go for that. And I then realized about this area that I had marked as a key area, and basically decided to just take it to trade, right? Why is, in my opinion, that a key area? Because as you can see, we had mitigated something way back, right? Pretty strongly, right? From that point, we basically created liquidity, took that liquidity, and fell pretty hard, right? It's not that we took demand or anything by this point, but we basically did have some good and strong bearish moves, right? So we then come back, we respect this, but the area of demand that we had here was respected, right? So this is a demand area, and right now this is a supply area. We take over the market, well, demand takes over the market, price comes back, kind of mitigates this for a little, causes a flip, reacts to flip, not quite what I wanted to get into, but basically let me delete this, and this. Basically, come back up, create liquidity. We had liquidity here. Come back down, continue to push higher, create liquidity, all leading towards this extreme, which is an SC, sponsor candle, or the block range pause that basically took liquidity. We had liquidity here, took all that liquidity and then fell, broke some structure, didn't change from demand to supply, but it did make a couple of quick breaks, right? So in my opinion, at this point, this is my confirmed high, this is my confirmed low, and all of the between that we have in the middle, right, is basically just well, substructure, pretty much, right? So yeah, price basically comes back up, starts creating these highs that basically keep taking out each other. We have a high right there, so that's in my opinion just more and more liquidity building up along with this one, right? And price then comes back down, mitigates that, and then after that we have a very strong push. We have a demand area that is being respected for a little bit, and then we basically cause the demand to supply flip, right? So for me, this is a key area just because of that, because this area was capable of creating the first demand to supply flip after such a strong move, right? We came from a pretty strong move, but this was not a demand to supply flip, but this was, right? So that's why, in my opinion, that was a key area, right? So that's pretty much it on that side. I think I'm gonna have to make a pause for now. So we basically wanted to see why I took this trade, right? I'm gonna make a pause. I'll come back in a few minutes. Okay, guys, I'm back. So I basically gave the reasons for this trade, which I was a little bit scared when it reached this area and it basically reacted like this, which it then causes this break. So at this point we have a demand area that caused a reaction and was then broken, right? So this area is a pretty good looking area to basically try and find a potential opportunity right there. So at that point, I decided to move my stop loss to break even, which I then moved my stop loss to this high when I saw this move, right? And well, as you can see, I got tagged out right away. So that was 2R that I basically got. I think it was 140 or something like that. It's a little bit more than 2R. But yeah, price later does hit target with NFP, with the NFP move. Actually, it does it before that. Okay, that's good then. I thought about taking this one. I actually think I placed a trade and everything as it had a lot of liquidity. We had liquidity below, so I was expecting price to take liquidity down, take liquidity above, and go down, right? But NFP came, right? And at this point, if NFP was not well happening, to call it somehow, I would have taken this trade. Sorry, because I actually realized I've seen this. It's not a pattern, or maybe it is, but haven't seen it as a pattern. I've seen this where we have an extreme. That extreme takes all of the liquidity below that it has below, right? And I see liquidity below, and I basically take this as a range with liquidity on both sides. So I expect this, this, and this, right? That type of movement. And what ends up happening is just price comes back to mitigate the cost to that and falls, right? So it takes the liquidity below, lifts the liquidity above, and basically falls. So when I remember that, I actually came back to basically try and place a trade, and I realized that, well, we were basically a few minutes away from NFP, so I decided not to take it. But as why did I leave this though? I was going to say I left this because, well, if I would have traded it, I would have been stopped out, but I'm not sure why. Because it does break the area, right? It does break the order block itself. But my stop loss would have been about this high, right? Because price could easily just come back and mitigate this, except for the pause itself, right? So if spreads would have been normal and, well, we didn't have NFP or something like that, I would have went into this trade 50% as it is a pretty large area, and basically stop loss above the high, and well, we could have targeted this equal lows, or we could have targeted the 15-minute bullish area that we had down there. That basically would have ended up being a pretty good and large at the same time target. So we didn't have NFP. Let's remove this replay. We didn't have had NFP. Of course, when you have such a strong new or something like that coming on, you expect weird movements everywhere, right? So after that, I basically said, okay, so I got at least 10 to 20 minutes free per se that I didn't really have to be that attent or paying that much attention to basically the charts, right? So I basically left the room for a couple of minutes, and when I came back, I saw that we rejected this, right? Which I see this area as an order block, right? And it's an order. It doesn't actually cause any kind of break, so it's not quite an order block, but I see an order block. We have a push up based on this, come back down, causes a reaction, first reaction, second reaction, right? So that's could be considered a demand area, right? Price then breaks through that. The cost was this, but it came back up to that. So it basically took this as liquidity and mitigated the whole thing, right? Fell down. And after that, we had a demand area that took liquidity. That caused a reaction. We have a supply area right here. That reaction fails, so it's a failed reaction. We have breakdowns, breaks down, comes back up, and mitigates that. So that's a pretty good entry. A little bit risky, as you know, as you can see, these are confirmed low, these are confirmed high. So we don't really have much of a trend. We went down and then up. So supposedly our trend right now is bullish. But when I see this, when we have such strong news, I basically just dismiss these two candles, right? In this case, it's two candles, well, three. And even if you think about it, price moved impulsively, right, on this and this candle, right, the third two. But the third candle, what actually does is just come back where price was actually before NFP, right? So before NFP candle is this one, 930 exactly, and before NFP basically is that candle. And price was basically in this range, right? And price with this third candle just came back into it. Literally didn't, it's like it actually never even happened, right? Of course it did happen, right? Because you have boom, bam, and then comes back into this range, right? But basically that's what, not usually, but that's what can easily happen on, oh wow, I didn't realize this. Marked it as a 5 minute, but it's actually such a clean area. We'll talk about that in a sec. Where was I? So basically we have some strong moves up and down, down and up, and basically just price just comes back to where it was, right? After that, well, of course you do have some weird movements, right? It's not that it comes back to itself right away, but yeah. So risky trade, but with I'd say enough evidence for us to actually take the risk there. We then break this low. So as an example, we could have targeted low, right? Just that, which would for R, which for me would be a 1% profit basically. We could have gone for that 5R. We could have gone for the 15-minute bullish. Either way, I would have had to take profit. Also, we then have from this area, we then get another pretty good trade, right? Which, to be honest, I was not quite trusting. I was kind of looking for the buys, but at the same time, I think I said it on Telegram. I was kind of looking for price to reach this area before reacting bullishly, right? So when it didn't react bullishly, keep in mind that this area is not like a huge, strong area. It's just literally this, right? That right there. It's an area that we kind of want to keep in mind, as it is an extreme area. It takes a lot of liquidity and everything, but the area itself, it's not something that I would actually put too much thought on it, right? And as you can see, it didn't even respect that. It did break the low of it, so not much there. So let me check something. Okay. So basically, we have a potential continuation right there, and what I failed to identify at this point, I was so convinced or so fixed on the reversal that I marked this as liquidity, which it is liquidity. We have two equal lows that price then takes with the wick of this candle, right? Takes the liquidity, causes somewhat of a reaction there, a pause here, we flip from supply to demand, we have liquidity, we then create more liquidity right there, and price then reacts to our area. At this point, actually, when we broke this high, I had deleted this area. I think I said that. And basically when price was coming back up and it created these equal lows with this type of basically manipulation, just showing that this is a strong area to retail logic traders, I basically decided to go for a trade. As you can see, it worked out pretty great until it reached this area, right? So what I failed to identify here, which is what I wanted to show you here, is this. We had a continuous push down. We come from somewhat of a 1 hour order block, right? We have caused some major break, right? So we have this basically move that took all of this liquidity, right? Then we have somewhat of a mitigation, major break, came back up to the extreme, another major break. So we're in a bearish market right now, at least based ourselves on 1 minute, 5 minute, and 15 minute time frame, right? So we come from a pretty strong bearish market, right? We still have price taking continuations, right? We have first mitigation, second mitigation, third mitigation. And what I failed to identify was this, the third mitigation, right? So what happens here is the next. Let me actually delete the whole thing and do a replay on it. So we had a mitigation here, which is that area is the cause to this flip. Well, not flip, it's actually a demand area that caused a reaction that was later broken, right? And the area that caused it was this pause that we have there. Price then breaks, right? We have a break in the structure, right? Continue with that bearish trend, right? And we have this extreme area that, as it comes from reaction, it's something that we have to keep in mind, right? It's not to take a risk entry. Maybe it is. It depends on how you want to identify it. For me, it's not quite an area that I would like to take a risk entry on, but it's a pretty strong area as it basically caused a major break. And not only that, but it's just that. Well, it also comes from mitigation, right? So that's two pretty strong confluences in my opinion. So yeah. So what we have here is a bearish market, right? What we can easily identify is the fact that we have flipped from supply to demand. And we can easily trade the cost to that, right? The cost to that in this case was this pause that we have right here. I think it reacts to something around there. Stop loss below the structure, and the target. The target is what we have to always consider. So having in mind this whole structure that we have right here, we have a very impulsive move to the upside, which could be thought as the strength that the bullish momentum, bullish trend, or demand has at this point, or as manipulation, right? So let's say we don't think anything about that, right? What we see now is price basically starting to respect this supply area, right? And then we cause basically a pretty strong move. So at this point, we have two things that we have to realize. We have equal lows, first of all, so that's liquidity towards this entry. So that's even more confluences than we already had. So that's already a pretty good entry. So we could be placing this entry right now. But at the same time, when we have such a strong reaction, this demand area, right, because it's a demand area, we're in a demand market right now. We flipped from supply to demand, right? So this is a demand area. We create a low, and then we move up, right? So this is the demand area. Price comes back down, and this causes a reaction, right? So we could have taken an entry here, for sure. In my opinion, it's not something quite valid. I was already thinking about it as liquidity more than a strong low, per se. But at this point, if we break that demand, then we have a change from demand to supply, right? So if we are thinking about this trade, we are also thinking about the next trade, right? Because if you think about it, for price to actually trigger that entry, it has to break the demand that we had there, right? That caused a reaction, and it has to go up, right? It doesn't have to go up. What I tried to say is that it has to go down, take the liquidity, mitigate the area that we want to get in, and then we'll either continue down or go up, right? So at that point, we have, shouldn't have deleted that one. We have that entry and the double confirmation entry on this area, right? So that's the pause before supposed flip. Of course, we already know it flipped, right? But here on this replay, it hasn't just yet. Not sure if we're gonna get trigger on the 25. I don't remember where it happened. So this is what we should have been basically seeing at that point, right? Keep in mind that analysis, we have a strong bearish momentum, strong bearish trend. We have reasons to believe price could easily trigger the demand, trigger this trade in the demand area and then continue to go higher, as we have enough reasons to believe also in the sell. Keeping in mind that we are in a bearish market, right? We come from a very long, extensive move to the downside, where we come from mitigation after mitigation after mitigation towards the downside. We expect price to continue with that trend. At least that's the expected order flow that we want to see, right? But of course, we have to keep in mind that price has to retrace, price has to take deep breaths. So basically, complex pullbacks or pullbacks, big pullbacks that could basically break highs as this one can occur, right? So at this point, we're keeping in mind the buys as we're keeping in mind the sells, okay? Let's see what happens next. We trigger the demand trade, the bullish trade. And at the same time, we take the liquidity, right? And at the same time, this now is a good trade, right? This is a demand to supply flip, right? This is a really good trade at this point. We have inducement to the top, so liquidity. And that's pretty much it. And we come, well, from mitigation after mitigation after mitigation, right? So let's see what happens now. Okay, so keeping in mind the fact that we can easily get a reaction from the downside, we had two things to do. We either go for the 5R or whatever logical target we had, such as, let's say, we wanted price to actually start pushing higher from this point. We could have targeted these highs, right? Something like that. That would have been a 1 to a 12. Having in mind the fact that, well, price can easily react to this, pretty much this small area right here. That is a pretty good supply area at this point. We could have aimed for that. That would have been a 1 to 2.72, right? So we're talking about somewhere I want to say, give me 1 second. Okay, I had to make a little pause. So at this point, we are inside of the buy. As I said, you have many opportunities or many ways to actually handle this situation. I think that the best way would have been to maybe keep up the buy, right? Keep the buy as whatever target you wanted to. My opinion could have been the 5R, so I usually do. And just see what happens with the sell at the same time, because it made sense. Both had good, how do you say this? Good, basically, confluences, good evidence for each of them. So both sides looked good. But if we do consider not the higher time frame, but a little bit longer term of the way that we are basically going, which is bearish at this point, we do expect the bearish move or the bearish supply basically to win in the fact that is basically happening right now, right? Between the supply, this demand area and the supply area, right? So being inside of those short trades, let's say you target that as a 2.72R target. And you target it, well, you can target whatever you want on this one. Could have gone for, I don't know. To be honest, I don't really know what you could have targeted here. You either go for the 5R, as you don't have any close target. Maybe the 15-minute bearish that we had, bullish, sorry, that I think it was somewhere around there. Maybe you could have targeted to that. Maybe you could have gone just for the 5R. But basically, price ends up respecting the supply, giving out a amazing trade, right? So what I failed to identify at this point was the fact that, well, I did identify the fact that we were in a bearish market. It's pretty simple to do, but I forgot to basically think what side has the most confluences, right? The buys had confluences to take a buy. The bearish had most the confluences, as we are in a bearish market, right? So we expect price to actually continue to go lower, right? And we have a very strong area that comes from mitigation after mitigation that even caused a demand to supply flip very often, very recently, right? So Does that mean that we're not going to take the buy? No, that does not mean that we're going to miss out on the buy. You can miss out on the buy if you want to be a little bit more passive or not as aggressive. It's basically taking two trades in the same area, pretty much. You can be a little bit more passive. Think, okay, so the major trend is a bearish, right? It's first trend. So you're looking for bearish trades, pretty much. And what you do is just take continuations on that direction, right? Even though you have confluences against you, at the same time you have confluences that that pretty much add up to that bearish trend, bearish trade, right? So maybe you didn't want to take the risk entry. That's fine. You got a demand to supply flip. We created liquidity. Price came back up, mitigated the cost, and fell for 6.43 hour. I think I actually got to 10 hour. I guess we'll see that in just a second. But I wanted to do that in a cleaner chart because the other one will kind of has a lot of drawings, right? But what I basically failed to identify here is this trade, right? That was a beautiful trade that, well, it reached a 14-hour target. If we would have gone for the bullish, we have 6-hour pretty much. So yeah, that's pretty much it on that trade. It's just pretty simple, to be honest. The way that I've been trading this past 2 days, I've really liked it. I've realized that I've actually gotten a little bit better, right? I've improved a little bit, and that has actually made me take trades like this one, or the trades that I took yesterday, which were pretty good trades in my opinion, to identify this trade, that this trade is good. I'm not saying it's a bad trade. I identify some of the details pretty well, and even considering that liquidity as an extra confluence is already pretty good too, right? It's a good hidden detail, right? That in this case gave me enough confluences to take this trade, but the only thing that I failed to identify is I failed to remember is to always look at both sides in the market, right? Because when you're about to cross the street, right, you're about to take a risk, right? Talking about real life, right? Because a car can come, a bus, whatever you can imagine, right? So what do? You look at both sides. Look at both sides before you cross the street, and you should be pretty much good, right? Unless, well, you didn't watch correctly. But pretty much here, when we're trying to take a buy, I always said that I try to analyze against me, right? And when I was in this trade, right, in the buy, I was talking through Telegram saying that this area is the only one that scares me, right? I wasn't expecting a reaction here, and it didn't. So you can see it just blasted right through. And I was pretty confident that the buys were going to win, but, well, there were very many details that I basically just failed to recognize at the moment that made me miss out on a win and cost me, well, a very minor loss because my stop loss was below these lows, right? That's pretty much it on that trade. I think that was a pretty good example on why you should always basically look at both sides, right? Because when you're taking a buy or a counter trend trade, you always have to keep in mind what's going on the other side. Because sure, this is liquidity, which is good for us that we're trying to buy, but at the same time, this becomes a demand area that if it's broken, a bearish trade becomes an opportunity, right? So that's pretty much it. I wanted to talk a lot about this trade because that was a really good example of basically paying attention to details and everything. So yeah, let's just continue. After that, well, price did a lot of weird stuff, right? Continue to basically, not weird stuff, sorry, just continue to push lower, created basically lower lows, lower highs, pretty simple, left a lot of liquidity, right? So I took a loss here, kind of still trying to force a reversal, which is something that I do a lot, and something that I've actually not managed to, how do I say this, to fix throughout the past few months, but I'll get to fix it at some point. So we have a supply area, right? That caused a reaction on this candle. So you can see there's a bearish candle right there, basically a reaction. That becomes a failed reaction as price goes higher, right? I took an entry, if I remember correctly, on the 25, of this, and my stop loss was somewhere around here. So I got tagged out pretty quickly, right? When that happened, we had a demand area that caused a reaction and was not respected, right? So an entry on this area would have been an opportunity. Now, I don't know if you remember, I talked about a concept a few days, I think it was a few weeks ago, where when you have a pause just before the break and price doesn't pull away too much, it's not likely to react to that one, but to go for the extreme, right? Which is pretty much what I thought in this trade. If I take this, it's just over trading. I'm just revenge trading, right? I just took a loss and I already identified an opportunity to sell, right? So at that point, I decided to say no. So then I identified this. This is a sponsor candle because it took these equal highs that we had right here and then broke a supply area, a demand area, sorry. I didn't actually place a trade, right? At this point, I was a little bit, I mean, the day was already ending. We were talking about 11:45. Around 12, I'm already not really looking at the markets. Depending on how the day was, sometimes even 11:30 is good enough for me to actually leave the markets. But today I was still looking at it as price was still giving out pretty good opportunities in my opinion, right? So what we have is a sponsor candle that caused a demand to supply flip, right? And a sponsor candle means that it took liquidity, right? So that was a pretty good trade, and it was in favor to the major trend, right? So we had some really good confidence. The only thing that I was pretty scared about was the buy, right? I didn't have the courage to take the trade, right? I didn't have the courage to take the market execution, and I ended up taking it here, where we had the biggest, somewhat of a retracement there, and I said, you know what, let's just take it. I took it. My stop loss was actually 30 at the beginning, 30 right there. And is this where it closed? No. And basically when price started moving lower and actually reached this high, which is a mitigation block, right? When it reached this high, or low, however you want to call it, I decided to move my stop loss to break even. At this point, I was at break even. I didn't care much about it anymore. So I said either get out in profits or break even, right? I wanted to let price do its thing, right? Just either get to take profit or either get to the break even, right? I was not going to lose money, which is good. But I ended up, my take profit was set to the 1% target, right? Which is why we have a 4.1 R target. And when it was, I don't know, probably around here, I think, if I remember correctly, it was on this candle, that pause there, which is when I took the screenshot and I sent it to Telegram. That's when I closed the trade. I think it was somewhere around 160, so we're talking a little bit more than 2R. Well, I can actually check that here. So somewhere around a 0.5%. And well, that's where I closed it. And later price to get to the target, right? So if I would have actually allowed this trade to get to target, talking about the 4R, I don't know if it got to 5R. Oh yeah, it did. Ooh, it barely did though. Oh, actually didn't. Oof, that would have been bad. And well, price later does get to target, right? To the 4R. If I would have let that target, that would have been, I would have gotten out with a 1% profit. Right now, I am at $425. So yeah, pretty much I got over with a 0.5% as I took a couple of losses. If I wanted to improve today, I think I missed out on some really good opportunities, and I was a little bit impatient in a couple others, right? As an example, this trade, I think it was a really good trade, and that good reaction, I just should have allowed price to get to target, right? My stop loss could have been above the high, right? Just to avoid taking a full loss, right? But my stop loss would have been good enough for price to allow price to come back in case it wanted to give another opportunity to then fall, right? So yeah, a little bit impatient on that one, which it's mostly psychology. I always say it. I don't have a great psychology. on when I'm inside of good trades. I have a good psychology when I'm inside of bad trades, because when I'm in the stop loss side, well, I just let it be. It's not that I move my stop loss lower. It's not that I close it when I'm a stop loss. When I'm a stop loss, I just let it be. If I take the loss, I take the loss. If it goes to target, then great, right? It's just as simple as that. But when I'm in a profitable trade, I'm thinking, should I close it? Should I close it? Should I close it? That's the only thing that I think about at that moment, right? And of course, I try to analyze against me to try to see logical areas where price could actually react. So, ideally, I would like to target here, right? Which would have been the high of this area, which price could easily react to, which verily mitigated there. It does come back up. I would have been afraid that the spreads would have tagged me out somehow, which is possible, but otherwise I would have been able to actually get out in good profits, right? That's right. So, what else? I think this trade was really good, which actually it has a very good it looks very similar to the trade that we were talking about a few minutes ago, where we have a potential continuation, we have liquidity, right? Continuation type of trade, and well, it fell down, right? So it actually looks really, well, not really similar, right? Because in this case, we actually don't have the liquidity that this one has, right? Yeah, pretty much that this should have been another trade that I should have been into, right? Even though I was still on buy. And besides from that, I think this is a fair loss. We could have taken this buy, but that one as an example is a little bit hard to find, so I don't how do you say this? I don't punish myself too much for missing out on that one, on this buy right here. The sell, in my opinion, was pretty clean, such as this one, right? That just sometimes you do focus on the details, but you forget to look at the other side, and that's what basically ends up fucking you up. And well, this area, we have mitigated something, right? But it took liquidity. That's the most important thing. We then created liquidity, mitigated all the liquidity and the extreme, fell down. We created, well, we had this high, had all of that, and basically price came back up, mitigated that with NFP, and fell down. Took all of these lows, and then it continued with that trend. So the news, impulsive news, always do random stuff. Oh, sorry, never do random stuff. They move weird. They look like they move randomly. But when you actually start looking at the details, you realize that there was an area here that was respected to the 50%. And there was something here, which I don't think so, that was also respected. Well, there's a high, this is somewhat of a pause there. It's not much just to call it an actual reaction there. But what I was trying to say is that even though news look random, they are not. They always react to something. And there might be something in the 15-second here. Yeah. So price came back up to mitigate that. We then break this high, the pause for that. So when you get to the 15-second, you can find a lot of trades, right? And that's why I don't like it, because you overtrade. But the details on this, you have liquidity, you have the pause before this major break, we come from mitigation. It's just, in hindsight, right? So after it happens, it just looks so simple and so clean. In the moment, of course, I try not to look that much to the 15-second time frame, because I know that I end up seeing so many things that, well, there's a trade maybe each 5 to 10 minutes, right? And that's not quite what I'm looking for. And the 1 minute still gives out amazing opportunities. You have that one, you have this one, you have this one, right? So yeah, AxeFX, I don't know if you guys know him. Set ones, I think I've said this before, but I'll say it again. Every move is tradable, but not every move is worth traded, right? That's pretty much what you gotta realize. You can try and buy every move up and try to sell every move down, but at the end it comes down to the ones that actually make sense, to the ones that actually are worth etc., etc. So that's pretty much it. I think I covered everything that I wanted to talk about. I believe and I see that I'm improving day by day. I still have to work out on psychology because I don't allow full take profits to happen. I think I have had three full take profits on my whole career. Well, not whole career, my career. And that doesn't mean that I don't take the profits. It's just that I closed them way before, right? Um, Hell, this trade I was about to close when I was already there because it was such a strong move. I just wanted to close there. And with this one, I was very patient. I was very proud of this one because when it was somewhere around here, I remember opening my MT4 on my phone to check it out because no alarm was set. Sorry, no alarm sounded, so I didn't get any notification, right? So I thought whether pushing down and close to take profit or whether just ranging, right? I decided to get in. I saw that we were really close to target, so I said, "Oh, it's actually going good." At that point, I just let price be. I was pretty proud about that, but my stop loss here will kind of fuck me up. So yeah. Yeah, that's pretty much it. A pretty good day. I could have passed the verification today too, of course. I think a 4%. So keep in mind that for verification, we're talking about 4%, right? I'm currently 1.4, 1.35, somewhere around that. Keep in mind that 2% is basically $500, right? And we get more than 4 take profits each day, right? So yeah, I'm very happy of my trading this past few days. The days before those, I was kind of messing up a lot. But that's pretty much all that I really wanted to talk about in this video. I hope that you enjoyed, right? Hope that you take something from it, and make sure to leave any doubts, any questions on the commentaries or through Instagram. I make sure to get through them. And thank you all for being here. Thank you all for watching, and have a great weekend. Bye bye.